Hi, welcome to Harbin Talks. Today we are going to have an important discussion on the topic personal finance with Mr. Prasad Patwardhan. He is an young certified financial trainer. Let us get into the discussion.
Hi Prasad. First of all, thanks for giving your time to this discussion. Can you please give a brief introduction on yourself to our viewers?
Hello everyone. Thanks Ashwin for having me here. I'm Prasad Patwardhan. I'm a civil engineer by education and personal finance is my hobby. I'm a qualified personal finance professional and I love to help people with their finances.
Okay. So that's great to hear. Can you say me what is personal finance and why it is important?
Personal finance is how you handle your income, expenses, assets and liabilities. See, everyone will have different sets of income, expenses, assets and liabilities. So here the word personal gains more importance. Everyone is unique in that sense. Everyone will have different background, so everyone will have different aspirations, and how you handle your assets and keep your liabilities in check and how you learn to do that is personal finance.
Okay, that's good. Can you tell me what is the difference between this assets and liabilities by probably giving an example?
So liability is when you owe money to someone or something, so that someone can be a bank, a credit card company, your relative, your peers, whoever. An asset is something of value which can be converted to cash. So let's say a piece of land will be an asset, while the vehicle taken on a loan, a vehicle loan, will be a liability.
So can I take in this way, like when something gets your money away from away from your pocket, that is a liability, and that the
Uh,
something puts you money in your pocket, then that is called asset. Am I right?
Asset, right, right.
Okay. Okay. Saying that, should personal finance is applicable for those who are earning, or is it applicable for the kids also? I meant like when those days we used to get some small savings from our parents when we are young, and we used to collect it in some piggy banks. So I shall start this question with the children only. So what the children needs to supposed to do with the money what they are getting from their parents and who are relatives, or like as a parent, what they are supposed to advise their children on the money what they are receiving.
Children of say age 7 to 8 years or above that can be taught the basics of savings. For them, having money in the piggy bank is also an achievement. They can be taught about basics of banking by opening a children's saving account in their name. You will be a guardian, but you can open the account in their name. They will get the ATM card, check, and they can understand the basics of banking. Uh, someone can also teach them to keep money aside, received from their pocket money or received from their gifts given by relatives, and this money can be used for buying some special gifts or special toys which they want. In this way you will teach them to save money for some special items. The basic idea which needs to be instilled is the idea of delayed gratification.
Okay. Those days, right? Parents taught us the importance of saving. But I can understand, like from what you're saying, apart from saving and investing the saving in a particular product which gives a return. So that is also equally important, right?
Yes,
And
yes.
you mentioned like delayed gratification. So can you explain what is that delayed gratification and why it's important to children, like starting from them?
See, delayed gratification is when you resist the temptation of an immediate reward for a future reward. So I'll give a example not for the kids but for some adult or some a young earner. Let's say you come across a latest gadget, a mobile phone. So instead of impulsively buying it using a credit card, you save money for it. In this way, you will form a habit of resisting the impulsive buying, and in the process, you will also save money spent on credit card EMI or personal loan. This is delayed gratification.
Okay, good. Okay, now let's move on to a adult by taking a particular example. Suppose a guy had started his career. Say, suppose his salary is just 30K a month, 30,000 a month. So what he is supposed to do in line with personal finance?
He or she can start with understanding the taxation rules on the income earned. See, when we are in college, we always have some dreams or some plans that when we start a job, we'll buy this gadget, we'll buy this bike, or we will go on this vacation. So there is always an urge to spend on those items. So while enjoying the income earned is fine, getting into a debt trap to achieve those is not good.
So by saying debt trap, I understand that you are meaning like using of credit card, taking personal loans on getting liabilities like your high costly gadgets and vehicles, etc. So in that case, I have a doubt. Like, is it wrong to use the credit card, or why is it supposed to be, or why it is in market credit card if it is a liability and if it is not to be used?
So you can take the earlier example of buying a latest mobile using credit card. Now, if you don't settle the dues in full, the interest rate charged on the entire outstanding amount is somewhere between 36% to 48% per year. Even if you go for personal loans or credit card EMI, the interest rate charged is somewhere between 13 to 18% per year. Now, no investment will guarantee you a return which will compensate this loss. So don't use credit cards for impulsive buying. Use credit cards wisely and pay the dues in full every time. This will prevent you from getting into a debt trap.
Okay. If I have to use the credit card so carefully, like under what situation then I should be using my credit card? Then what is the actual use of the credit card? If not for buying any gadgets, if not for buying any vehicles, then what is the use of credit card?
See, credit card can be used for emergency occasions. Let's say you have to buy medicines in the midnight. Someone is ill at home and you have to buy medicines, or you have to get that person admitted to the hospital. At such times, you cannot go to ATM to withdraw cash. You won't have that much cash at home, and you cannot go to the bank. So in that case, you can use your credit card. That is the emergency occasion. But like I use credit cards to pay my bills, but I ensure that I settle the credit card dues in full every time, each month. If you're confident you can do this, use credit cards. It is a great way to build a credit score.
Okay, good. So I don't take so much risk. I simply avoid using of credit cards. I simply don't use. I use only debit cards.
Even that is fine, but if you have to build a credit score to get some loan, credit card is a good option.
No, but if I'm not going to get any personal loans or something through credit card, then automatically my credit score will be up, right? So why I need to buy a credit card and then I have to prove that I have a good credit score? I don't get it.
No, see, if you don't have any loan, like you're not repaying any loan, or you're not closing any loan, in that your credit score is not necessarily ideal score. So when you go for, let's say you have to go for a home loan, in that case the lender will go through your salary slip, your this bank balance while giving you a loan, your job security while giving you a loan. But if you have a credit card, your credit score is established, there will be lesser hassles in getting that loan.
Okay. Okay. So, okay. Coming back to the original question, like if a person is going to start his career at new, okay, what he is supposed to learn or understand in line with his personal finance?
So start with understanding the salary slip. Understand all the deductions shown on your salary slip, because many a times we don't understand our salary slip, where our money goes. Its CTC is different, the in-hand salary is different, there are deductions. So understand that. The next is buy personal accident insurance. That is very important. Then save at least 10 to 20% of your salary every month. Invest this in tax efficient products. Check if your employer is giving you a health cover. Check if your parents are covered in that health cover. If your employer is not covering you in under any health cover, buy health insurance for yourself. If your parents are not covered under any health cover, buy health insurance for them too. Next is, if your parents are dependent on you financially, only then buy term insurance. Don't invest in products just for the sake of tax saving. Understand the process of ITR, that is the tax filing. Understand inflation and compound interest. And last but not the least, invest in yourself. See, you are your best investment. Money is required to make more money. Unless you upgrade yourself, upgrade your skills, don't earn more, you will not be able to save more, and in turn, your net worth won't increase.
That's a lot of point to understand. But as a fresher, how you expect me to do all this handle like equity funds, tax saving funds, insurance, health insurance, medical insurance, term insurance?
So one should get in touch with his or her financial advisor. See, everyone is unique in terms of assets and liabilities. Your financial advisor will help you in maximizing the assets while keeping your liabilities in check. He will help you in saving tax and understanding various asset classes, the benefits you earn, the risk involved in handling those assets, investing in those assets. He or she will guide you to save your tax, do your tax filings. He can guide you through the entire spectrum of investment.
So, okay. So either one has to learn by himself all these activities, or should get any help from a proper certified financial trainer, right? Right? Am I right?
Right.
So ultimately, at the end of the day, one should be able to handle his money like the way it deserves to be.
Yes, correct. See, handling money is very important. You have to learn it. You can do it yourself. You can take the help of your financial advisor. But please start understanding the process of handling the money. It is money, but it's completely different thing to manage it.
Prasad, while discussing, you are telling about like many types of insurances: medical insurance, accidental insurance, term insurance. So I do not know what is the difference between each insurance and what is the significance of each. So can you please elaborate on the insurances one must have?
Okay. See, insurance is a method to avoid risk, or you transfer the risk on the insurance company. And there are many types of insurances which you can take. So insurance is a very vast topic, and it will require very detailed explanation, discussion, and I think we should take it up in a different video.
So can we have a separate video on insurance only then from you?
Yes, surely.
That would be really helpful.
Yes, we'll have a separate video where I will cover all the insurances, which ideally one should have.
Why? Because insurance is subjected to market risk.
Thanks for listening till the end. If you have any doubts regarding personal finance, you may please contact Mr. Prasad, and I am sure that he can able to manage your finance and build your wealth. Thank you.